Hi, everyone. Basil Chapman. This is, in fact, the Tom O'Brien Show. I'm sitting in for Tom. It's my pleasure. It's my honor to be sitting in this chair right now and taking over, at least for 1 hour. Steve Rhodes comes, fabulous technician Steve Rhodes comes in 5 o'clock time, so 5 o'clock Eastern, that is. And let's go straight to the market. This was fascinating. If I said this in my show earlier today, let me just mention that Monday through Friday, 11 o'clock until noon, I do a show. It's called the Tiger Technicians Hour. Call-in show 877-927-6648. Same number, same concept. Call in, ask questions about the market. We try to answer them based on technical analysis, at least in my case, technical analysis. And I may as well just mention that a week from today, Thursday, May the 30th, I will be doing a free 3-hour workshop right here in Newton, where I live. It's Newton Highlands, actually, where it will be. And you'll see all the information on the front page of TFNN. I wonder if I can just get to it right now, just show it to you. Right there. That's a picture of me from a while back. And it says, come see the Tiger Technicians Hour live. What I'm going to do, this is really exciting. When I was down in San Francisco, I had a live, basically it was a workshop. It was a presentation that I gave 3 hours. And it was very well received. And I thought, wow, wouldn't it be nice to do that in my hometown? But there's a difference. I decided I would do it in the daytime. I wasn't sure I'd get 3 people, 4 people. It looks like people are already signing up and wanting to come. So go to the front page. All you need to do, because I need to be able to tell the sponsors, this is the Women's Club of Newton Highlands, I need to tell them how many chairs, how it's got to be set up. Just, it's a formality on my part. I want to respect what they've done for me to make the event happen. So this will be 10 o'clock in the morning until 1 o'clock in the afternoon, live. And the Tiger Technicians Hour between 11 and 12, I'm really looking forward to this, is going to be questions from the audience. It'll be live. It'll be broadcast. You'll be able to get it on TFNN. So let's go straight to the chart. Sign up and let me know how many people are coming. Really looking forward to it. What I'm going to do right now, there's two pieces of business I wanted to do. That was the first. The second is this coming weekend will be the last time you can sign up for these Tiger dollars. Basically, where else in the market can you spend $500 and get $600? I mean, you get $100 for nothing, 20% a bonus. Look at the front page of TFNN. We've got all these fabulous services. Tom, myself, you've got Steve, you've got Daryl Martin, you've got Dave White. We are full here at TFNN with really tremendous techniques that you can develop and involve yourself in. So go to the front page, check it out. There's the den that you can join. So let's go on. I'm looking at the market, and I'm going to show you something. If you are new to my work and you're looking at Tiger TV, what I'm showing here, and this is really a very, very simple concept. You look for the lowest low bar. This is part of the Chapman wave methodology. And from the low bar, you merely count each successively higher peak. It can go to a peak D, the 4th highest peak. I label them capital letters on the way up, lowercase on the way down. It can even go higher. Well, look at this. In my opening call, that's my daily subscription series for my subscribers, we actually went long right around here at about 14,800 with a 200% long the DDM, 200% long the Dow 30. And we're fortunate we got out with a really big gain somewhere around, I think it was 15,300 something. We took profits. I did go short. We just got stopped out by a fraction the other day, yesterday, in fact, and then the market tanked. But it's okay. I said to subscribers this, and now I'm going to explain what I'm looking at. The market, the Dow closed down 12 points. Tokyo last night, or the Nikkei was down 7%. In the early morning, the futures and the indices were down huge, 2%, almost 3% losses throughout the world. And we came in and we started off down sharply. But what I'd say to subscribers is this. There's something going on here, and there's certain support levels. I'm going to go into those on the technical basis in a moment. I'd love to just go through the numbers and show you the charts. Remember, the lowest low bar, we want to get to a D or an E. It can go high, but D is where you've got to be careful. Even if it gets to an E, E is where you've got to be careful. Now, the Dow itself closed at 50,294.50. Look what happened. There's this beautiful trend line. I'm going to expand the chart. This chart is the daily chart. if you expand, this is what my subscribers get every day, a whole story about the Dow, besides all the other work that we do and the Traders Corner with the stocks that we have. We are in a slightly mixed portfolio with a stronger bias to the buy side at this particular point, and then most of the stocks are doing well. One is up actually 64%. We'll see what happens here. Now look at this. That trend line became resistance, and where did it stop the Dow yesterday? As the Dow spiked higher, it went just fractionally into, oops, there it is, above, and then it closed below what I call the inside track. That's a technique that I use where I draw parallel lines at the top of a channel and parallel lines at the bottom. What happened is the Dow went under the 9-period moving average, that black line, and it closed. So it went all the way down to 15,180. In my report this morning, I showed in my opening call, I showed these 5 segments. This is the 120-minute chart. I said that if the Dow made a peak E in the Chapman wave 120-minute chart, and we've got to watch that carefully. And if the VIX volatility index breaks about 14.45, it goes to leg D in the 120-minute chart. Remember what I just said? Peak D is where you've got to be somewhat careful. Look what happened at peak D. The VIX, the volatility index, hit 1511 and then pulled back sharply. The short-term trading index gave me a signal that said that within 1 to 2 days, there should be a strong rally in the futures. Well, we got that intraday. I'm not sure how carry over tomorrow. I'm going to discuss that in a moment. You see the very simple chart, just bars. These are not candles. You see the resistance all the way from March, April. Then all of a sudden, you break out for 1 second and then you pull back. Same thing in the S&P. That's the S&P. So I'll discuss those as we're going on. So what are the parameters? I suspect that at this particular point, we're going to make, I said this morning in my show that I think we're going to make a kind of a rally that takes us a little higher. I don't think we're going to take out the 15,542 level. What I do think is that we're setting up for what I call a right shoulder failure pattern. And that's going to be very important because the next time when the Dow does take out 15,180, the low of today, it's going to go lower. But I suspect a big chunk of the selling was done late yesterday and early today. Now we're looking more at time than price. That's my thinking at this particular point. The stochastic, right, is a stochastic, is a technical tool I use at 84%, still strong, under 80% that weakens, and this is the MACD, still good. And here's their leg D. Remember we're talking about from a buy signal to a buy mode, it goes A, B, C, D. So this is in leg D, and the high of 15,542. If next week there is no new high above 15,542.40, if it goes to 0.41, that extends leg D. If it's under it, it makes a peak D, and we've got to become a little careful in the weekly charts. The monthly is still very bullish. That doesn't mean to say you couldn't have a sharp pullback, but it's very bullish because there's this up channel going to the 16,000s, and it says that this is leg C. You've still got to get a month of a lower high that will make peak C, and then leg D should start. So that's still looking out, still very positive on the market. I suspect we're going to get a rotation. Let's look at the S&P, SPX.X. The S&P right now, same thing. This is peak E in the daily. Big pullback, goes to the 9-period moving average right there. It closes just a fraction under it. The MACD's turning down, stochastic turning down. I suspect any rally in the next couple of days will have to come and do some testing at the bottom. Leg E in the weekly. So we've got to be a little careful here. The Qs, 1, 2, 3. The Qs made 74.95 high. That makes peak D today. And the same thing applies that there could be a rally, could even be a nominal new high, but I suspect we're starting some kind of a rotational consolidation, and the boundaries will be set by about Tuesday or Wednesday of next week. Leg D in the weekly, got to be a little bit careful there. Let's go on. I'd like now to go to the gold. I'm going to go to the gold. Gold closed up 22 at 13.90, and silver was up 0.08. Now let's look at the GLD. I've been discussing this for a while on my show. A long time ago, back in April the 15th, I said the candle that was forming today, and then the next day I discussed it in greater detail with my subscribers, that volume, I call it a climactic volume spike. That spike went to the low, huge volume, And my analysis in this particular technique says we should get an H pattern that takes a minimum of 28 days, and if it doesn't break 130.51, it could start another M pattern, which I think it's doing. I'll be right back taking your calls. Bonds were up 7.30 seconds and the dollar was down 69. I'll discuss that when I get back. Basil Chapman sitting in for Tom O'Brien.